Hey there, Jack Bosch here, and welcome to another episode of the Jack Bosch Show. Today we're going to have Akam calling in. And Akam, my understanding, has more of like a what's happening in the future economy kind of question. Well, let's see what Akam has to say and what comes from the session. So super excited to talk about that kind of a subject. Let's get this show started. Hey Akam, how are you doing today?
I'm doing great, Jack. How are you?
Wonderful. Thank you very much. So good. So what do you do for a living?
Yeah, I'm full-time in real estate.
Okay.
Commercial real estate to be exact. Focused on multifamily, existing multifamily.
Okay, so you're a multifamily owner, operator, and syndicator or something like that?
That is correct.
Okay, very cool. How many units do you have out there, or generally speaking?
We have just around 300 units across 3 buildings.
All right, very nice. Good, and what is your question?
So, Jack, my first question actually has to do with the economy. One of the things I like to look into is macroeconomics.
Sure, I love that too.
And obviously, the Fed says this and that. They've been saying a bunch of stuff over the last couple of years, misleading the country, I'd say. But where do you personally believe we're headed economically, especially over the next year to 5 years?
Well, let me bring out my crystal ball right here. So just kidding. No, obviously nobody has a crystal ball. So my guess is perhaps spot on, perhaps totally wrong. But here's how I see the world. We are definitely in a world where there's a lot of money circling the globe. As you know, like the fiat currency kind of world, there's pretty much very few, if any currencies around the world are backed by gold anymore. So the federal banks really have an unlimited amount of ability to create money. And they have, as we know, created trillions of dollars and trillions of euro and trillions of ruble and trillions of yang and whatever it's called around the world, particularly during COVID. And so as a result, we're living in a world with high inflation right now. So the first thing I want to perhaps structure my answer around a couple of subjects. The first thing is I don't think we are going to see extremely low inflation rates anytime soon. Inflation is leveling off, and that's a good thing. But it's probably going to stay a bit higher than we are used to for at least a couple, 3 years. Because there's just too much money still floating around the world. That also means that probably interest rates are going to stay up higher for the next probably 2 years. I'm expecting them to start going back down about in the third year from now, and we're doing this in early, in March, April of 2023 here. So I would think through 2023 through 2024, we're going to still see higher interest rates, and I see them leveling off, going down again probably 2026. Now, at the same time, I believe that we are in an accelerating cycle of booms and busts. Now, what I mean by that is that back in the days, when the money was dollar tied to the dollar, nobody had the ability to borrow crazy amounts of money to just do crazy stuff with it. And frenzies and big kind of mass hysteria around certain subjects where everyone would invest in one thing just plainly did not exist or were not existing at the degree that they exist today. But since the deregulation of the financial services and of the dollar, for that matter, those things have basically happened faster and faster and faster. So you look at it from 89, that was the last big real estate crisis, or let's pick one of them. It took all the way to 2008 for the next big real estate crisis. Well, that's almost 20 years. I mean, there was a 9/11 crisis in between, but it wasn't necessarily a real estate crisis. And then from then, it only took 12 years for the next crisis to happen. Now, I believe that after a little bit, the masses, all the stimulus and so has worked its way through at least the masses of the people, which should be sometime in the next year or so, that the average person is already hurting and doesn't have that much money anymore. And then inflation starts going down, probably year 2 or year 3. the world is going to go on turbo boost again, and a lot of the same asset classes that have been seen as going up like crazy, like real estate, financial services, stock market, is probably going to go to another big boost. But this time, I think it's not going to last 20. It's not going to last 12 years. It's probably going to last 5 to 7 years. And we're hitting ever larger and larger busts until eventually, still in our lifetime, I think the dollar is going to get printed into oblivious, and we're going to have a complete financial currency reset, a digital currency, and all this kind of stuff that nobody wants, but it's coming.
What would you say is a great strategy to invest? Just kind of paint the picture of what someone should learn and jump deeper into, given the environment economically.
Yeah, no, I 100% agree. So the last thing I wanted to say to the prior question, which actually plays into this one, is there's just the masses are the ones basically running out of money. But the institutional money, the real wealthy people, they're sitting on trillions and trillions and trillions of dollars, and they can't wait to deploy that money again. They're just waiting right now for at least a few lights to not be yellow or red anymore. As soon as the first lights are turning green, that money is coming back into the market. That money is going to go all over the place again. And the boom is starting, artificial or not, but the boom is going to continue going again. There's just too much money waiting on the sidelines. So with that said, where do you invest for the short term, and where do you invest even for the long term? Here's something. I'm originally from Germany. So when we visit my home country and Europe every single year for the last 23 years, and I've been in the country for 24 years. So with the exception of the couple of COVID years, I've been basically to Germany every single year. And I always have a saying that's like, you sit in Italy, you sit in Rome. Rome was the world's headquarters of the most amazing city in the world back 2,000 years ago. Right? The Emperor of Rome was sitting there. Caesar was sitting there. Then Rome in the Middle Ages hit absolute. It was a shit show. It was kind of like falling apart. But you know what? You're sitting today in the Rome on the Spanish Steps, and you look around you. That real estate has been there. Some of that has been there for 2,000 years, and it's still worth, if you adjust it for inflation, the same today than it was back then. So real estate is the first answer. First of all, if somebody's also listening that is not yet in real estate is the first answer, because companies come and go, but a well-built piece of real estate can literally last forever. And in the US, we're not used to that concept of real estate that lasts forever. But in Europe, we are. I mean, in my hometown, there's buildings they're 1,000 years old, and they are worth $1 million today. And they were worth, 17 gold pieces back then, or 500 gold pieces 1,000 years ago. And 500 gold pieces is probably $1 million today. So if you look at it from what holds its value best, and which one in an environment that's going to see if eventually the destruction of the US dollar. Now, I don't expect the destruction of the US dollar to happen anywhere in the next 20, 30 years, but it's still going to happen in our lifetime. So with that said, that's a precursor to a longer answer here, but there's something beautiful in the US, and that is the fact that you can get 20-year loans or even 30-year loans. If it's single family, you get 30-year loans at interest rates with no prepayment penalties. If you're in the multifamily space, obviously there are prepayment penalties, but usually they wear off after the first 5 to 10 years. So what I would do is I would get myself a deal that cash flows really strong, a deal that has a lot of upside potential, a deal that is in a growing market, and that is in a long-term growing market. And I would buy and hold that deal and finance it with the longest depth that you can get. Now, of course, right now interest rates are high, so that's a little bit harder to do. So I am, as I said earlier in the first question, I do expect interest rates to go back down probably in the next couple of years, 2 to 3 years. So if you can learn the game of multifamily in the next 2 to 3 years, and then really get good at it. And then when the interest rates come back down, and when there's great opportunity to buy, or perhaps in the next couple of years, there might also be great opportunities for distressed multifamily to come in, then get something really like a smoking deal is a smoking deal that works even at higher interest rates, and then lock that in with a 20-year loan if you can, but at the same time with the shortest term prepayment penalty as possible, so that when the interest rates come down, you can refinance that thing at a low interest rate and just hold it forever. Because what I do love about multifamily, other than land, I love that a lot, of course, is that people always will have a place to live. And while even that is going to be challenged over time with kind of like the 3D printed houses and those kind of stuff, it's still going to be an asset class that is sought after, that is used after. Because if you look at it, I know people that invest heavily in parking garages right now. Okay, that's a risky subject, in my opinion, because I think the self-driving car is going to come faster on the mass market. I mean, there's already self-driving cars. I live in Phoenix, Arizona. Yeah, I can get a self-driving car today to Waymo, drives up to my house, and I get in. There's no driver in there that drives me already places. But that as a mass strategy, that people don't have a car or 4 cars or 2 cars in their house anymore, but they have an emergency car and the rest they just take basically Waymos or cars like that, that is going to come. So whoever invests in parking garages right now, they're simply not going to be needed anymore in the near future unless Waymo buys them and Waymo puts their cars in there at night when nobody needs them. Right? So same kind of thing with different like retail. Amazon is not going to stop innovate. And Amazon is going to deliver their stuff by drone in a matter of 20 minutes. At that point, you really don't need to go anywhere anymore for retail. So retail is risky, but real estate, long-term held, because it has been proven for centuries, if not thousands of years, as an inflation hedge, and that's my thing. Now, the second part is location. So as the shift in the economy started, we also own multifamily. We own close to 1,000 units. We have sold our multifamily in any market that we don't believe is a long-term continuous growth market. We currently only looking in 3 markets around the U.S. that have a 30-year plus history of about a 2 to 3% population growth per year, like Phoenix, Arizona, a couple of cities in Texas, a couple of cities in Florida. That's the only places we're looking for. Before, we bought in Oklahoma City. Oklahoma City is like a boring market. Doesn't go up, doesn't go down. But in a market in a world where people work from home, in a world where everything is virtual, in a world where inflation is high and things like that, people are going to be moving there where the cost of living is fairly reasonable and where they can also have a quality of life. And unfortunately, Oklahoma City is just not the hottest market for quality of life. I mean, at least my opinion, the bunch of times I've been there. So we have left all those tertiary and secondary markets, and we're only in those high growth markets, because in those markets, we expect continuous rent growth. We expect continuous solid occupancies. We expect continuous demand for those properties, and therefore, look at Italy again. There's small villages, lots of small towns where they actually pay you to buy a property because nobody wants to live there anymore. Yet, real estate in Rome is expensive. Real estate in Paris is expensive, but somewhere in the countryside in France, they give houses away. And it's the same thing in the United States. People are they're gonna continue to move to the sexy, attractive places in the US. And for the long term, that's where I want to be.
Do you see areas where there will be issues for multifamily because you have so many people as technology advances that go virtual and are able to work from home from anywhere in the world?
Yes, I do see those things. As a matter of fact, that's exactly where some of those cities that don't have much to offer, those are going to suffer. The cities that are just not that attractive for anyone to want to move there, they're going to suffer. They're going to lose people. That's one reason we left Oklahoma City. So, and I'm dying to bash Oklahoma City. It's a fine town. It's a nice town. It's a nice downtown. I'm not making fun of Oklahoma City. It just happened to be we had a 146 unit apartment complex there, and we sold it right at the top of the market. And I have no intentions of going back to buy a new property over there, even though I can buy them at $60,000 a unit. When at the same time I have to pay $180,000 a unit in Phoenix, or even $250,000 a unit. I rather buy in Phoenix because there's going to be continuous demand in those things. But having said that, there's also some exceptions to that. There's also the area where you could do really, really well because with the advancement of technology, not everyone wants to live in a big city. So small but fun cities are also probably very good bets. Like, for example, one of the top 10 retirement places in the world, or not in the world, in the United States, or they was voted one of the top 10 places to retire. It's a small town, is Prescott, Arizona. Prescott, Arizona has hiking, it's about 5,000 feet elevation. It is cool in summer. It is still warm in winter because it's in Arizona. It has lakes. You can, within an hour and a half, you're at the Phoenix airport. You're within an hour, hour and a half, you're skiing areas. So it's cool. It's kind of quaint. It has that kind of Back to the Future City Hall kind of place, square in the center with a bunch of bars, has good restaurants. Towns like that are growing, and they don't have enough multifamily there. So if you can buy something there, you're probably really in a very small market, niched in, you're probably doing very, very well too. And then there's the land part. Like, for example, we are also driven, all these pieces that I talked about, like the technology, the fact that people are virtual, like right now, still 48% of all Americans work from home. That makes it, that's over 70 million people that work from home. Not everyone wants to live in a big city. Not everyone wants to even live in a small town. A lot of them want to live on 5 acres close to a big city or close to a small town. And some of them even want to take the RV and go out and buy 20 acres and build a cabin or live in their RV or at least spend weeks at a time there. And with the advent of things like the Skylink, for example, and again, the ability to work from home and solar prices that are going down rapidly, you can have 20 acres 2 hours away of a big city. You can put some solar up there. You can have, or put it up on your RV. You can have Skylink, and you can sit for 2 weeks at that spot, work from there. And a lot of people are doing that. So in our land business, that's obviously one of the legs we stand on. We're seeing the demand for properties in the outskirts of bigger cities, like in a 50-mile radius of big cities, as well as like larger acreage a couple of hours away from big cities. We're seeing the demand for that through the roof, even while house prices currently are going down. So there's no such thing like real estate. There's all these different facets of real estate, and location plays a role in what people use it and so on. So there's lots of different movements going on in different kind of areas.
I got one final question. So when I have individuals come to me and ask me like, hey, how do I get started in real estate? Or they ask me specific questions about real estate, I always have to break down to them, the difference between a small deal and a big deal. And what I mean by small deal and big deal is by the amount of equity that's possible in a deal, right?
Sure.
If someone comes to you and says, hey, Jack, like, I know the basics of real estate. What should I jump into and why? Would you push them more towards doing bigger deals with larger amounts of equity, where they're doing maybe 1 or 2 deals a year? Or are you pushing them the route where they have to, but they can do 5 to 7 deals and they take those smaller checks?
So that's a good question. I have always fared well with, and we have a real estate coaching company, so I've always done really well with our students by taking them along the journey of getting to the journey that teaches them the most, while also giving them checks along the way. Most beginning investors their biggest problem is lack of trust. Lack of trust, number one, in the person teaching them. That could be the greatest teacher in the world, but they don't know that yet. And secondly, lack of trust in themselves. So they don't trust themselves enough because they have failed in the past in other things in life, potentially, that they don't, and if that they often don't have the stamina to stick it through. And what comes with larger deals, often, not always, but often larger deals are a little bit more complex, take a little bit longer to put together, and take a little bit longer to sell. Again, not always, but sometimes. So having that standing power without seeing a check is a hard thing for a lot of people to do. So because of that, what we like to do, and we teach land flipping, we like to take people to micro successes. So we tell them, like, you do this, you send out these letters out, you're going to get this many response rates. They get it, and they're like, oh my God, that actually worked. And then they do the next thing, and then they make offers, and they get an offer accepted. And it's like, oh my God, that actually worked. And even though, and while breaking it into manageable steps that then end up in a successful result, not yet a check in the mail, but a successful result, it reinforces them, and it makes them want to go to that next step and then next step, and soon enough they have their first check. And even if the first check is only $3,000, to them it's a proof of concept that they can do it. It's a proof of concept that we know how to get them to do it. And now they're excited, and they're doing again, and soon enough they're doing $100,000, $200,000 or so checks. So I'm a big proponent more of rather doing more smaller checks at the beginning, in order to really also, what that comes with is also mastery. You do $1 million deal, that's great, but have you really mastered the process while doing that? Not necessarily. Like you had a bunch of failures. You had to have a lot of stamina to make it through that. And versus 10 deals in that same time period that make you $10,000 each, you made only $100,000, and the other one you made $1 million. But I personally rather see our students do the 100,000, because now they have developed mastery, and then go, okay, so if you do 100, you can do $1 million. Let's now tweak the kind of properties you go after, because you already know the process. You already trust yourself. You can always go back to doing $10,000 or $15,000 deals, but let's now go after $1 million deals, with the knowledge that chasing that $1 million deal might take you half a year or a year to get, but you can always fall back to the other one. Now they're coming from a place of confidence, versus before they came from a place of fear and of doubt. Does that make sense?
Yeah, it makes a lot of sense.
Right. Cool. Awesome. So I don't know. I mean, you're already doing great with the multifamilies and those deals. Have you started right away with the big ones, or did you work your way up to?
Yeah, that's a good question. So I started with wholesaling, then I did flipping for a year. And after about 2 years of wholesaling and flipping, I jumped into commercial real estate.
In essence, you just
like 6 months, and then I started taking action.
Yeah, in essence, you just answered your own question, because that's exactly what I just said. You started with wholesaling, which is the simplest and the most replicatable way of real estate that most people can do. And then after learning that and building up your confidence and your bank account, you're like, okay, let me do fix and flip now. That's more complicated, takes more time, more moving pieces. And after that, hey, I can do that. Let me study multifamily, and then you move into multifamily. We did the same thing. We started with land flipping, where you don't have to really know anything about real estate. We got our first piece of land worth $8,000 for $400, and sold it to the neighbor for $4,000. I didn't know anything about anything in real estate. And then over time, you built the expertise. Then we started buying single families. Then we buy the portfolio single families in a different city. We realized we can manage it remotely. And that's when we started buying multifamily remotely in different cities, because it's the same thing. Actually, it's simpler to manage 100 units than it is to manage 40 single families in different places.
I completely agree.
Yeah. All right. Very good. Well, then, thank you very much for calling in. Hope that was helpful, and wish you much luck in your continuous journey.
Yeah, you too, Jack. I appreciate you. Have a great time.
Thank you very much. All right. So with that said, guys, that's another episode of the Jack Boss Show. Hey, we talked about economy. We talked about which way to take on your journey to learning real estate. I think there are some good nuggets in there. If you missed some, listen to it again and share it with your friends and family, because everyone needs to know the importance of real estate investing. So with that said, guys, give us that 5-star review, share it, and if you're watching this on YouTube, by the way, hit that subscribe button and that notification bell. Love seeing you at the next episode.